We had some incredible economic news come out this week that shows the labor market is teetering. We'll talk about that, and we're also going to talk, if you're a millennial or a Gen Z, you got to pay attention because you know the age of the first-time homebuyer, the average age of the first-time homebuyer is 40. And let me tell you, that is too long to wait. We got to reverse that. So we're going to be talking about a few things that you can do now so that you're not waiting until you're 40. Heck, not even waiting until you're 30 to buy that first home. But let's get into the housing market update for the week. We start off with the big three as always. Prices are steady. Inventory is steady as well. Interest rates, that's right, green arrow. Interest rates are going down. Not a lot, but that's okay. We just need that steady drop. Nobody likes surprises. Big drops, big rises, don't like that. Let's just see a steady decrease in rates. Let's take a look at the headline news this week. We have a labor market showing signs of cracking. We're going to talk about how millennials and Gen Z can beat the odds and buy a home. And we're going to answer the question, do you need a 20% down payment to buy a home? And I'm going to tell you the real life story of a Gen Z service member who bought a home before he turned 25 years old. This is a great story. I can't wait to talk to you about this. And VA rates, again, dropping below 6%. Actually, they were below 6% as we started the week and have continued to go down from about 5.93 down to 5.87. This was as of Thursday. Let's go ahead and take a look at the ADP employment report. Let's take a look at that ADP jobs report. This is the private sector jobs report, and this was a huge swing and a miss, folks. The expectation was that there would be 40,000 jobs gained across the private sector. We had a 32,000 job loss. That's right. Now, 4 out of the last 6 months, we have seen negative numbers in the job reporting or new jobs gained. So really just showing signs of cracking in the labor market. And you look at the small business numbers. Now, just know also that small businesses equate to about 50% of the employment across the country. And we saw 120,000 job losses in the small business sector. Now, let's take a look at pay. Pay actually decreased for not only job stayers, but job changers. Now, back in 2020, 2021, even 2022, people were poaching left and right. You saw people who were changing jobs, their pay raises were going up a lot. Well, guess what? We saw one of the biggest decreases we've seen from 6.7% down to 6.3%. So really big drop in pay gains. We're not getting a BLS jobs report this week. Normally we get ADP on a Wednesday and BLS on a Friday. Not going to get that until the 16th. Odds of a 25 basis point cut by the Fed just went up into the 90s based on this report right here alone. And we had initial and continuing jobless claims that came out, and they were down this week. But there are other reports that are refuting that unemployment is going down. We have Challenger Jobs report shows that the expectation is that we will have 71,000 job cuts announced in November, and hiring plans are at the lowest they have been since 2010, which was during the great financial crisis. And seasonal hiring, obviously we hire during the season because of businesses ramping up for the holidays. Hiring plans for the season are at the lowest they have been since 2012. Folks, let me tell you what, this is the indication that the Fed needs to make the decision to lower the Fed funds rate. All right, so say you're a millennial or you're a Gen Z and you want to buy a home, but you're not ready yet. Hey, that's understandable. Most people aren't ready, but the time to get ready isn't when you finally make that decision to buy a home. You typically need 12 to 24 months to get in a position to buy a home. So it's important that you start early. One of the great things that a loan officer can do is they can help guide you through the process. One of the biggest things is credit. Your credit score is your financial report card, and your ability to buy a home, or buy a car, or even get a credit card is going to be determined by that credit score. You get F's in credit, you get no loans. You get A's in credit, well, you are credit worthy, and lenders are more than likely going to lend you money. All right, debt management is another thing. How do you budget? And what do you pay off first? Say you already have a lot of debt. Well, the time to start paying that off is now. Well, what do you pay off first? That's where talking to a lender who doesn't just do your loan, he helps you become a successful homeowner. That's where a good lender is going to come in and give you the information you need. Hey, let's focus on this credit card first and then move to this one. Do that snowball effect and then paying off this debt. Let's talk about savings. Maybe you need to save for a down payment. Okay, well, how much do you need to save? What is your budget like? What can you do to get money put aside so that you can buy a home? Again, a loan officer can help you with that budgeting. And let's talk about a realistic affordability plan to show maybe you buy and people want to say they want the white picket fence. They want the big house right away. In most cases, your first home is not going to be your forever home. So let's get you into that first home, which will in turn get you in that forever home later. All right. So really working with a lender can help you kind of see through the clouds, see through all the darkness, and help you kind of establish that plan to buy a home. And let me tell you what, I got this great app. All right, it's a Key Step app. I use it. It helps you with your credit. It helps you it runs you through scenarios to get your credit score up faster. And it helps you with the budgeting and the savings goals that you need so that you can buy a home. It's free. You're not going to get harassed by me or anybody else. There's no ads. You're not going to get tempted by credit cards or installment loans. It's simply an application to help you get into a position to buy a home. And the time to do that is now, not when you're ready to buy a home in 12 to 24 months. One of the biggest questions and one of the biggest myths about home ownership is, I need a 20% down payment. No, you don't. We're going to talk about some loans right now, and you don't need a 20% down payment, especially if you're a first-time home buyer. Conventional loans, all right, it's a standard Fannie Mae, Freddie Mac loan. First-time home buyer, 3% down with good credit. Not 20%, not even 5%, 3%. FHA loans require as little as 3.5% down payment, and you don't have to have great credit. You should have decent credit, but you don't have to have great credit. USDA, U.S. Department of Agriculture. These are homes or loans for rural home purchases. 0% down. A great loan product. And guess what? In Oʻahu, Ewa Beach is still considered rural. A matter of fact, Ewa Beach, Waianae, the North Shore, all of those areas are considered rural, and you can use a USDA loan with 0 down to buy and no money out of pocket. I should say no money down, contrary to popular belief. And then the VA loan product. If you're a veteran and you could be an active duty veteran or a prior service veteran, you may be eligible to use the VA home loan benefit. That is 0 down. That is hands down the best loan product in the world, at least in the United States. I know it because I've used it multiple times myself. It's a great loan product, and if you have a VA home loan benefit, you should use it. All right, and there are also many state and local programs that can help you and offer down payment assistance. So if you're looking at buying that first home, you don't know where to start, you just know this: you do not need 20% down, but what you do need is guidance from somebody who's going to hold your hand and help you get keys to that first home. How much home can you afford in Hawaii? Don't guess, let's get it right. Think you can afford a $700,000 home? Maybe, but here's the truth. Income, debt, credit score, and property taxes all play a role. And in Hawaii, those numbers hit a little different. Let's break it down. I work with home buyers every day who are asking the same question: how much house can I actually afford without drowning in the monthly payment? Today we're going to unpack it for you. No fluff, no pressure, just some real talk. Too many folks fall in love with homes before knowing their real number. That leads to stress, missed opportunities, or worse, overbuying. Understanding what you can afford helps you shop smart, negotiate strong, and buy with confidence. In this video, I'll show you what lenders really look at when approving you, the key numbers that shape your buying power, what are Hawaii-specific costs that often get overlooked, and how to find your true monthly comfort zone. Here are the 4 main factors lenders look at. Income. Not just your salary, but bonuses, side hustle income, if documented, and how long you've had it. Debt, credit cards, car loans, student loans. Lenders look at your debt to income ratio, or DTI. Your credit score. The higher it is, the better the terms you qualify for. Remember, your credit score is your financial report card. Down payment, more down payment equals less risk and more options. Pro tip, just because you're pre-approved for a number doesn't mean you should max it out. Hidden costs, especially here in Hawaii. Property taxes in certain areas, insurance, think flood zones, hurricane coverage, HOE fees, they add up fast in condos. Utilities, especially if you're going solar. Those things all impact your true monthly budget. Here's a general guideline. Try to keep your mortgage payment, including taxes and insurance, at or below 33% of your gross monthly income. Your total debt load, it should be under 45% ideally. No more certainly than 50%. Here's a real life example. If you earn $4,000 a month in a housing allowance, that's roughly your target housing budget. And let's work this backwards. Do you travel? Do you have kids in private school? Do you love eating out or supporting family? Nobody loves support. Actually, we all love supporting family. Your budget has to work for your real life, not just a spreadsheet. Another question, how long will I be in Hawaii? The best defense against being over your head is time. The longer you own the home, the more your home will appreciate. And since Hawaii is all about appreciation, time equals equity equals risk mitigated. Now, you don't have to guess, and you shouldn't. I offer free strategy calls where we will break down your full picture, look at your real numbers, and build a plan around what fits. One of my clients is a young E4 in the Air Force. He qualified to buy a $500,000 condo, but we went over his budget and realized he was more comfortable at a $300,000 range. And we could keep him within his BAH. Working with a great realtor, he purchased the condo for $275,000. It appraised for $308,000, by the way, and has a mortgage payment below his BAH. Oh yeah, the seller paid his closing costs and paid to buy his rate down into the mid-fives. Key takeaway, affordability isn't just about what you can borrow, it's about what feels right month to month. When you know your number, you're in control. Want help finding your number? Reach out. I'll help you look at the full picture, walk you through your options, and help you buy with confidence, not confusion. So let's talk about rates. VA rates are down at the lowest point that they have been this year, and we're right around 5.87%, and there is certainly room for rates to go even lower. Inventory, now I tell you what, let's take a look at this chart here. This is a chart that I built using the inventory. You can see on the y-axis on the left side, you see the active inventory of homes in Oʻahu. We got up to a 10-year high, over 3,500 homes on market at one time in July. And we saw interest rates were in the mid-sixes then. Well, since July, interest rates have come down and they are squarely into the fives now for VA. Look at the inventory as well. You see that red circle, the inventory, as rates have come down into the fives, and that's what that area, that yellow area between 5 and 6%. As we get rates into this area, what is happening to inventory? Inventory is coming down. So what we're seeing is when interest rates are in the fives, and if you go back over the last couple of years, every time interest rates drop into the fives, you can see the beginning of 2023, interest rates drop into the fives. Inventory falls off a cliff. Interest rates go up, and guess what? Rates come back down when interest rates drop. At the end of 2024, interest rates drop into the fives again. You saw inventory start to come down, and now you're starting to see inventory come down again. So what I'm saying is, dude, rates come down and inventory drops like it's hot, all right? Now, here's the other thing. What's going to happen if interest rates continue to fall? Expect inventory to continue to follow. And also expect more sellers who have been handcuffed by higher interest rates to take those handcuffs off and actually put their homes on the market. So this decrease in inventory will be offset somewhat by people putting their homes on the market. By spring, if we see rates continue to go down, expect seller credits to slowly go away as more buyer competition begins to flood the market. And by summer, expect home prices to start going up again. Now, let's look at the opposite. Say interest rates start to go up again and we see interest rates, VA rates, go back up into the sixes. Is it possible? It absolutely is. This market is uber volatile. But what is going to happen if interest rates go back up into the sixes? Hey, guess what? It's going to be a buyer's market still. You're going to see seller credits remain the norm. And you're also going to see short sales and foreclosures, which are starting to go up, still near historic lows, but you're going to start seeing those go up as homeowners begin to struggle more and more. So that is definitely not good news for owners, but that is good news for buyers who are looking to buy a home and get a better deal on a home. Here's the last thing. Home prices will start to drop. We're starting to see pressure on home prices. They are, I won't say they're steady. They're starting to come down a little bit. You're starting to see that in certain areas. Interest rates go back up. You're going to see home prices come down even more. So really, these are two opposite ends of the spectrum. I personally think, it's not what I hope for, but I personally think that rates will continue to drop. And as we get into the spring, expect seller credits to start going away. And then when we get into the summer, expect home prices to start going up again. So that's what I see if interest rates go down. You know what? Do me a favor, like, comment, subscribe. Tell me what you think. Where do you think interest rates are going to go? Do you think they're going to go up? Or do you think they're going to go down? And do you think I'm off or on with regards to inventory going up, inventory going down? You can't argue with the numbers. You see them right there. Those numbers don't lie. Interest rates affect inventory going up or inventory going down. All right. Thanks a lot. Appreciate you listening. And let me know what you think.